Hello and welcome to the first edition of Trade of the Week for 2025. I'm Zinati Guma, and joining me for your weekly dose of technical analysis is senior technical trader at the Money Hub, Moxima Gama. On today's episode, we'll be getting analysis on Hyprop, Tiger Brands and Spar. Thank you so much and Happy New Year, Moxima.
Happy New Year, yes.
Yeah, great for you to join us. Yeah, great for you to join us all the way from Cape Town.
Thank you.
Well, quite interesting, the stocks that you've chosen today: a property counter, a food producer, and a food retailer. Is there any specific theme on why you've chosen these stocks to analyze today?
All right. So usually at the beginning of the year, I kind of do my stock picks for 2025. And these are just three of a litany I have.
Okay.
But the particular reason why I liked these ones is because of a pattern that it's forming. And once I tell you, when I see this pattern, I get very excited.
Okay.
When it actually breaks out, though, because it could be very laborious and frustrating when it's still forming the second phase. So it's a three-phase pattern, and it's known as a bottoming up pattern.
A bottoming up pattern,
Yeah.
okay.
So it could form from a minute chart to a monthly chart.
Okay.
But it holds more weight if it's forming on a weekly chart and a monthly chart. And what we're seeing at this point in time, and you know, I love myself a Hyprop. I've been talking about Hyprop for
Yes.
a while. But what we're seeing is a recent breakout. When I say recent, I mean a few months, possibly towards the fourth quarter of last year.
Yes.
Which is exciting, right? Because we want that, because once it then starts the final phase, and you know, the uptrend remains intact, it literally could do a 100% retracement from its all-time high. So it's always preceding a downtrend, a very extended, elongated downtrend.
Yeah.
And I'll explain it when I see the chart.
Yes,
So I chose these three because of that pattern that stood out for me and the recent breakout. And the second reason is because they also offer dividends, and with decent dividend yields, which you know, if you're investing in something like that, it would be nice to have a quarterly or a bi-annual income from the shares. So that's the premise of choosing these three.
All right. Well, let's actually start off with Hyprop, which
right.
you have said is one of your favorites.
Yeah, it's been. I think I've actually spoken about it on the show.
Yeah.
And this is literally, as you can see, this is what a bottoming up pattern starts off with. It's as I said, it's three phases. So you have that downward extended downside, right? For years,
it was very long.
Very long. In fact, it even gets steeper at this point in time. And then the frustrating part that you kind of have to wait for, because you never know when it's going to break out, is when it forms that consolidation period.
Okay.
Now, if you look at Hyprop, that consolidation period only actually commenced in 2020 and recently breaking out in 2024.
What, 4 years?
4 years. So it's one of those, you need to get that level and wait for the level to break out in order for you to at least enjoy the benefits of that prolonged upside that is anticipated from the pattern. So then you have that consolidation, and then you have the ascending phase, which then commences once a particular resistance level has been breached. And in this case, it is at 39 Rand 05 mark. So the ascending phase commenced above 39.05. Right. I spoke about this in one of the business day when I came.
Yes.
And I think I had said it's a buy at 39.05. I mean, Hyprop is now trading at around 46.
Yes.
So if you did heed to that advice.
Okay.
You know?
So we should listen to you.
Well, listen, if you want, if you find me to be good. So at this point in time, it's obviously then starting the ascending phase, which was then, as I mentioned, commenced at 39.05. And if this bull trend remains intact, it's important though, because you don't invest and then forget about it.
Yes.
You need to see if that bull trend, the ascending phase, remains intact. In other words, those rising bottoms continue forming. If that bull trend remains intact, then we have the likelihood of it gradually. I'm not going to say it's going to test it in the next 2 years or 3 years. You never know. Yes. It could then gradually go up to one of its all-time highs, which I think that should be the all-time high at 140. 295, it's about 143 to be exact, which gives you a whopping 266%.
What?
Okay, so this is a buy and hold for as long as the uptrend is intact. You need to bear that in mind. So at this point, the RSI has pulled back because it was overbought, which I kind of like, because then it gives you an opportunity to get in if you haven't invested in it.
Participated,
But it's also important that you watch if the RSI maintains its own uptrend. And this uptrend has been maintained from, I suppose it would be the beginning of 2024. So it's not too far from that the support trend line rather. And if it bounces on there, So effectively, if you put numbers to it, if if the uptrend remains intact,
Yes.
and Hyprop continues to trade above 39.05,
Yes.
particularly if it trades above 46.60, then we can then see upside to about 65 Rand, where you could reload, and you could just see that natural progression of the upside with those double tops forming towards its all-time high. So what you need to do is just watch it on a weekly basis or a monthly basis to ensure that, excuse me, this uptrend is intact.
Okay.
So it's a fresh breakout. I get excited when I see these, particularly for that long-term consolidation, because the longer that consolidation forms, the bigger the pattern or the breakout becomes.
Yeah.
So if you'd entered at this point in time when it broke out of its bear trend, you would have sat there a bit miserable.
I can imagine, yes, for all those years.
All those years, but the fruits of that then start showing. As you can see, the celerity of the upside is quite strong. So it's corrected from an overbought position, which is great, because then it gives you the opportunity to invest if you want to invest. So yeah, I would say any level above 39.05 makes a good opportunity to invest. With potential upside, I would say at this point to 65 Rand, because let it get there and breach that level for us to see other resistance levels to be breached. Okay. Then there's the alternative scenario, because you're always going to have
an
alternative scenario,
just to protect yourself.
To protect yourself, that if it does happen to pull back below that 39.05 mark, then it tells you not to invest yet.
Okay.
Excuse me. Because it then means it would have then threatened the continuation of that uptrend.
Okay.
And this would have then been seen as a false break. And we could then see it potentially fall down to 27.25. So anything below 39.05 means put the call on ice, or put the trade or the investment on ice.
Oh, that's actually very interesting. And just one quick comment on that. Is this also just because I know that the property sector, there's a lot of appetite that came into it, particularly after the formation of the GNU and the interest rates as well. Is this also just a kind of a part of the general trend of the property sector? Okay, definitely. And that this is just one of the property counters that you just happen to like.
So that consolidation would have been a tug of war of not doing it, because within that consolidation, our interest rates were still pulling back. We're still rising.
Yes.
So it was an anticipation of the minute they start doing interest rates or start cutting interest rates. So if you, as I said, you would have been so frustrated for the 4 years, but now you're seeing the fruits of your patience.
Okay.
So definitely that, and we are anticipating further cuts, so that will bode well for a lot of the property shares. And also they've pulled back so much. I mean, some of them are testing all-time lows.
Yeah.
It's the natural progression. If it's cheap and interest rates are starting being cut, it just makes sense for a lot of asset managers to get out of one sector into the next.
Okay.
Yeah.
All right. Well, let's go into food producers, and this is going to be quite an interesting one, looking at the inflation trajectory that we've seen over the last couple of years, and obviously with consumer pockets under strain. And I would imagine that they haven't really recovered at this point, but also there's just a lot of competition in that space as well.
There is. Can I just go back to Hyprop just to mention the dividend part of it, which we forgot. So they offer about a decent 12%, which is for quarterly, every 4 quarters. So I mean that's
you want that, yes.
Yeah. Okay, so Tiger Brands does kind of act in a sense as a defensive stock in a way, because it gives you consumable goods that you need.
Yeah.
But of course, it had to go some cyclical cycle of it pulling back and also forming again that bottoming up pattern. That's what we're seeing with that ascending phase. Now the ascending phase started quite early. It started, I think it would have been the second quarter of 2024, and so that ascending phase commenced when it traded above 229.6. So let's just say 230. Right?
Okay.
So it's been going up, and as you can see, if I had to draw a trend line, which I should have done here, the trend is becoming steeper. And the sooner a trend becomes steeper, it then shows a lot of buying appetite.
Okay.
So, so having completed that ascending phase, and if it does maintain, I have to stress this, like the disclaimer of them all, when it comes to bottoming up pattern, if it does maintain its uptrend, then there's a likelihood that it could go to its all-time high, which is at 478.10, which is a 72% gain.
Yeah.
All right. So RSI pull back again. So if you felt like, oh, you missed the boat, worry not. it is giving you the opportunity. And in fact, it is going on dividend, I think, tomorrow.
Okay.
Yeah, they're offering, they do dividends bi-quarterly, twice a year.
Okay.
And theirs is about 4%. Still, you know, it has come off a very, so it's still kind of, hopefully that dividend yield will increase, but at least you get something. And if the RSI also maintained its bull trend, that bull trend has been maintained since 2023, which is quite a strong bull trend. So in it pulling back, any level above, I'm going to try and round off these numbers.
Yes.
254, all right? I'm at most, if it could fall back to 254, right?
All right.
But if it happens not to and kind of holds above 277, that then gives you, and particularly if it starts trading above 300, so it's at 297.65 to be. So above 300 means you should be invested.
Okay.
All right. And that 72 is actually calculated from it trading above 300. That's 72%
Okay.
gain.
Okay.
And then natural progression of its upside to other resistance levels until it gets up there. So what you need to follow through is if it's breaching those resistance levels, and if at time it breaches a resistance level, you can reload, buy more. Obviously, the more you buy, the more dividends you get, and so onwards. So this is looking, for me, this is looking really great. It's broken out of, it's in the ascending phase. I wouldn't skip a beat with this one. The alternative scenario, of course, right, is that if it happens to, and which is the one that would say don't get in, it's, you know, something has happened, it's the sentiment has turned negatively, is if it starts trading below 230.
Okay.
And then if it trades below 230, it obviously means it's compromising this uptrend. And it could then turn bearish towards 183.15. So for as long as it's trading above 230, it makes a good investment.
Yeah. But also this one was also in a consolidation for a while.
For about, for about 4 years. I mean, this is a long time, and it's a huge consolidation, you know?
Yeah.
So it's
very interesting because when you're in that phase as an investor, you kind of get nervous.
You get nervous, and you also just get really, because, you know, for instance, you'd be caught out at this point in time where it reduces, where it pulls back, and you're thinking, what am I doing?
Yes, exactly.
But in retro, when it holds support, then it kind of figures, you figure out that, okay, it may be forming a base of some sort.
These are really important things for us to look out for. This technical analysis.
Especially if you see your share trading in a consolidation period, you need to figure out, you at least know the support and resistance.
Okay.
Because if it breaches support, it means the consolidation's ended negatively. You need to get out of the share.
All right.
But if it's still holding above support, it's a sign to stay in.
Okay.
And not panic.
All right.
Okay.
All right.
Just husa.
Yeah, exactly.
All right.
All right.
So how it would look here is that any level above 280 or 277, potential upside to 4010, which is a 45% gain, could still continue to about 480. So the only time you would then start feeling as if, okay, things are not going in that direction is if it starts trading below 230.
All right.
Okay, I'm rounding off numbers here.
Yes, that's fine. All right. Let's move on to Spar. That's a lot has happened there, so it's going to be quite interesting to see what the chart has to tell us.
The chart is telling us that it seems as if sentiment has moved from pessimism out of a tug of war between buyers and sellers into optimism, right? So that's another bottoming out pattern with the descending phase. Consolidation phase, not as drastic as others. From 20, I would say about late 2023. So it's about a year, but it's significant. But you know, the rest are quite huge, which then means that's why they're giving you such huge returns. You're 266, you're 72% because of that. So it's broken out of its consolidation phase in the ascending phase, which actually started at 130.20. All right. So if it maintains that uptrend, then we're likely to see it go up to its all-time high at 227, which is a 61% gain. Not too bad.
Okay.
Unfortunately, with this, it hasn't. The last time it offered a dividend was in 2022. They were supposed to offer one in October 2024, but then the board decided against it. So it's always good, as you know, we don't want them to be digging into their pockets to offer dividends only for the share price not to do well.
And at least we know that there are some strategic things that they are doing.
And there's intention to offer. Yes, you know. So hang 10 with this. I mean, in terms of the dividends with this one, but at least enjoy the potential upside that could pan out. RSI also, I'm loving the fact that they're coming off extreme overbought positions, which then gives you the opportunity to invest. Now, for as long as it's trading above 130, particularly 140, then you can get in with potential upside to, you know, every time it breaches those resistance levels, it could go up to 181 at first. It also major resistance at 181. If it breaches that, we can then completely see it heading to its all-time high.
Okay.
right? Now, the alternative scenario in this case, as you can see, the distance between that trend line and that is quite close. So once it trades below 130, which is where the ascending phase started, you need to start, that's the caution sign.
All right.
And, you know, once it trades above 122, it means you shouldn't be invested in this at all. Because then it threatens that uptrend, and we can see downside to 107.
All right.
Okay. So basically, any level above 130 or 140 could give you a nice gain. And then if it trades anything below 130, and particularly below 122, it means you shouldn't be investing in this. Okay, so this is basically how your summary would look. You can invest in 2 of 3 of those, or all 3. But luckily, 2 of them offer dividends, so you'd be able to get an income from that too.
All right. This is very, very interesting. So thank you so much for that analysis.
I'm glad you liked it.
We'll definitely be looking out for that pattern, a bottoming up pattern.
The long term. Look, it takes forever, but once it
breaks
starts
through,
the ascending phase, you're in good ground.
All right. Well, thank you so much for your time there, Moxima. That was Moxima Gama from the Money Hub. And that's where I leave things with you. But be sure to stay tuned for lots more coming up right here on Business Day TV.